Hey, everybody, in this episode, we're going to be talking about our new partnership with Blanket Homes and how their owner investors get this free portal system. It's fantastic. You got to listen in. Welcome, everybody, to the San Antonio Invest podcast. My name is Brad Larsen. I am the founder of Rentwerx and Sailworks, covering the San Austin real estate markets. My company, Rentwerx, offers full-service property management and leasing-only services for investors, along with aiding buyers and sellers in purchasing real estate for investments or their primary residence. After leaving the U.S. Army as an infantry officer, I landed here in the San Antonio area, and I've been selling real estate since 2003. The purpose of this podcast is to show and highlight some of the great takeaways from the local, national, and national real estate markets that can affect you. So one of the first questions I go into after I do my intro is, why is this important to you? Well, because we're the ones paying close attention to the real estate market locally. Nationally, of course, we have our feelers out, but locally, we are in it day to day. We are looking at statistics. We are getting gut feel from both renters, owners, investors, primary residence buyers. We're seeing the entire picture of the residential real estate market here in the region outside of multifamily. Now, multifamily does affect what we do, but for the most part, they're their own separate animal. They run completely different than your regular single family home, duplex, triplex, fourplex type of a unit. It's completely a different animal. They have different screening criteria. They have different gimmicks. I mean, they just do different things. So it's a complete different outside entity, because almost everybody wants to live in a single family home. They only get stuck in an apartment for whatever reason. Yeah, they have some amenities. Yeah, they have some good location stuff. But at the end of the day, if you'd say, hey, would you rather live in a single family home or an apartment in the third story where you have upstairs neighbors, downstairs neighbors, and neighbors to your left and right banging on the walls? It's a clear question that everyone's going to answer. Yeah, they'd like to live in a single family home. And that's what we pay close attention to. So luckily, we are now in 2025. Here it is, January 2025, and we have new leadership in DC bringing a completely different attitude to the game. So we are all kind of sitting at the edge of our seat to just see what kind of levers are going to be pulled at the national level, to include any sort of tax breaks, tax abatement, any sort of tax incentives that can come along, anything that they can do, regulation removals to spur the housing market a little bit. And when I say that, I hate to even speculate sometimes, but like, what if they removed all capital gains out of all investment sales? Holy cow, the investors would be selling like crazy, but then buyers would be potentially buying like crazy, because if they made that a long-term ruling, people would know, if I get into residential real estate and have no capital gains, instead of investing in the stock market where they have capital gains, that could be an absolute game changer. And I don't think that's going to be a possibility necessarily, but boy, what if? And that's the kind of levers that I'm looking for. If they could do something like that, holy cow, the investment strategy on real estate would completely flip. Because what's happened in this region, the Texas region, the investors are getting killed by the property taxes. The counties have raised the property taxes so high, so fast, that the numbers are starting to not make sense for some investors with the high interest rates. The higher interest rates means, okay, if they're sitting on a lump of cash, 100 grand, 500 grand, 50 grand, it makes more sense sometimes to take that and put it into a stock market or even a low yield fund than it is to leave it in real estate. However, I would make the argument, again, I'm an insider, that you can never quite account for appreciation, and you can never account for depreciation of that asset, along with the tax breaks that funnel down to the individual investor. That's just something that is very difficult to quantify. And I feel we've got a good solution to that in our partnership with Blanket Homes, which we'll go into here towards the later on. So one good thing is we are seeing consumer confidence go through the roof right now. The activity we've seen just in January on our listings has been tremendous. We're seeing buyers come out of the woodwork. We're seeing them purchase, and we're seeing them just live with the interest rates. You know, we've all had this hope that interest rates are going to go down, 2 points, 5 points, whatever it could be. Gang, we're never going to see the 2 and 3% interest rates again. That was an anomaly. That was a weird situation. That was the unicorn of interest rates. I think we're going to see it as 7%, 6.5%, 7.5%, and we're going to see that medium point for the duration, forever, let's say. Maybe it gets down to 6, that'd be great, but it's not going to drop to 3. It's not going to drop to 4. So having seen the interest rates in the last few years, that's an historical low still, because if you remember 25 years ago or even longer, talk to some of your parents or grandparents, they're going to say, yeah, I bought a home when I was 14% interest rate. And they still made money. Okay, so they still made money on that, and that's what is going to happen today. We just have to get our head around that. The interest rates are where they are, and don't let that influence you, because now the consumer confidence is going up because of the new leadership in DC and all the different things going on. A lot of people were just sitting on their hands waiting to see what was going to happen in 24 with the election. It's here. We have a new leadership and been inaugurated. There's been 350 some executive orders, all in a good fashion to spur the economy with natural gas, with energy, with all kinds of deregulation. I mean, it's going to be a great time the next 4 years. So I would not wait to purchase rental properties. We're looking at purchasing rental properties. So it's a thing that you should consider as well, and alongside of potentially keeping the ones you have, because I think that's going to do very well the next 4 years. Now, some keynotes I'm going to talk about. I looked at the keynotes here this morning. I made some good notes. And so I get this information from Independence Title. So I appreciate them allowing me the information that is compiled through the San Austin markets. And Independence Title is one of our great partnerships. We take all of our closings to them, and I appreciate all the updates and efforts they've given us. So 2024 ended up in the lower third of the last few years as far as performance on number of sales and average days on market and sales price, et cetera, lower third. So I think that was the bottom of the 5 or 6 years that have been decently memorable in the last few years. So average sales price was up in the upper third of those same stats. So that was a good thing. The sales price are going up. Months of inventory way up from others. And that was a key point I wanted to bring up is last year was peaking above 5 months of inventory. And that was, you could see the chart. 2024 was a standalone model above every other year as far as what we call months of inventory, which is how we gauge if it's a buyer's market or a seller's market. Now, I understand it. It's a seller's market if the months of inventory is below 90 days. It's a literal buyer's market if the months of inventory is above 90 days. Some may have a differing opinion on that. Maybe they reference days on market. Maybe they reference increase in average sales. There's lots of different metrics there, but that's kind of a loosey-goosey term to define buyer and seller market. And then you get really nerdy and go down to like the price ranges and some of the zip codes. And to say that an area is in a buyer's market sometimes is a generic blanket that just doesn't quite work. And that's a pun intended. It's a generic basically saying of, it's almost a stereotype where it may not be actually true. So in our market, unfortunately, in the last 2024, because of the stats that I saw, we were definitely in a buyer's market. So sellers have to get a bit more aggressive. They have to potentially get really aggressive on the list price and asking price. And then if you do get a buyer on the hook, make a deal. You got to make a deal somehow. If they're interested enough to write a written offer, you just got to figure out how to make that work. So 2024 was also the year of the new home. New home sales were up 19% in 2024. So I understand, I think, kind of why, just in between the lines. The new homes were offering interest rate buy downs. They were giving away incentives like crazy, and they were padding the price of the home, and then they were figuring out how to get the appraisals done. So new homes, of course, like them or not, especially some of the new home dealerships, they were killing it. They were up 19% from their year prior. So obviously a lot of people went towards a new home for those reasons, all those incentives. Average sales price down 1%, with around a 98% sold to list price. So that 98% is actually pretty decent, a little bit better than what I thought. When I say the 98% sold to list price, you list a home for $100,000 and somebody comes in and buys it for $98,000. There's probably some back and forth negotiation, but in previous stats I've seen, it was as low as 94%. So that's significant to where it does reflect an upward tick in that method of pricing. Now, average sales price was down 1%. It's right at $374,000 here in the San Antonio market for sure. Austin a little bit higher. It's up in the fours, but that was the average for 2024. And the last one is the average days on market was 78 for 2024. So the 78 days on the market versus 2024 was December 2024 was 85. Now there's a disparity there that's difficult to explain, but the average days on market is 78, but the number of months in inventory was 5+. I know 78 days does not equate to 5 months. Where's the difference? Well, of course, they take the average, and it really does get skewed when it takes something 6 months to sell, and then you can sell something else in 6 days. And that's where the average comes up looking weird. It's almost like Google reviews. We have over 2,800 Google reviews, but if we get a 1 star from a disgruntled tenant, it knocks us down, and it takes 20 5-star reviews to replace that. And we're very aware of that. So, that's part of our gig as property managers is we have to be the shield for these owners. And tenants, when they vacate the home and they leave it in less than perfect condition, they do get dinged on their security deposits. And of course, they take it out on us. But that's what we are here for. That's why somebody hires us to do what we have to do. Now, I wanted to talk about the introduction to Blanket Homes. So Rentwerx, as the title said, is partnered with Blanket Homes. And this is a really cool owners portal that all of our owners get free access to, where they can log in and check out all of the different metrics on all the properties that they own. And it's a super cool platform to see how you're doing on the cash on cash return, how you're doing on the NOIs, what your insurance is looking like, what your property taxes are looking like, all those really nerdy metrics that you need to see the value of what you own, in addition to an opportunity to buy more. Because if I told you, hey, you can make $1 for nothing, you'd probably want to do a whole lot of nothing. And it's just kind of common sense. So we want to be able to show you in that Blanket Home prospect what kind of ideas you may come up with on buying more properties, because that's what we're here for. We as a brokerage, we help investors buy more homes, and we're going to sell you something that we can manage. That's one thing you have to understand. If you go to any other real estate company in town and they don't have a property management company, they're going to sell you something they can absolutely sell you as far as whatever they can get you into. Why do you like this home as an investment property? You may ask somebody. Well, it's got really nice curtains and it's in a good school district. Versus Rentwerx is going to show you, well, this is the ROI, this is the cash on cash return, this is what you're going to need to do to manage it, this is what you're going to net every month, this is what we charge, and then we have to rent it out, and we feel it's going to rent for XX, and it's going to rent in probably 2 to 3 or 4 weeks or whatever it's going to be. We can give you all those numbers in addition to potentially selling you a home that's already in our inventory. We do get sellers that want to cash out. I'm personally handling those homes now. And there's a lot of various reasons. A good one was one of the sellers I was talking to that we have just listed his home. He's going to take all that money and put it into a new business. Hey, that's great. I love it. And, he was aware that he's going to have to pay capital gains, and he got all that. So we talked through what's your end state of selling, in addition to what are the ideas for potentially buying other properties later on. Everyone has their own reasons, but this partnership with Blanket Homes, accessing that owner's portal, is going to give you really good insight on what your numbers are looking like for the homes that you have, the homes that we are selling, and the homes that may be out there that we don't manage, that are out in the open market that might be a good fit for you, because that's what we do. And that's what you're going to see inside of Blanket Homes. We're very proud of that, by the way. So in summary, our consumer confidence is going to go up crazy in 2025. It's going to be a fantastic time. Rentwerx, as always, is a full-service property management company. We offer a super good agent referral fee of $777. Go to refer777.com. And of course, our flat commission rate for our existing owners is at 2.5%. And that's me handling your home personally to sell. 2.5%. A buyer's agent commission is negotiable at the time of the offer. So it's a great time to be in real estate for sellers. And of course, if you're a buyer, we can also help you with that to buy you an investment property that we can manage for you. So I want you to all visit rentwerx.com, rentwerx.com. I appreciate you listening in. Until the next episode, we'll see you then.